Hello, welcome back. And what I'm going to be talking about today is how to look at the market overall and look at this opportunity right now that we have to make a bunch of money, as far as the stock market goes. And, unfortunately, there's horrific things going on right now over with Russia and Ukraine. And it's horrible, and as far as hopefully that straightens out as soon as possible. But that situation might last another month, might last another 6 months, might last another year, might last another 5 years. We don't know. What we do know is even if the conflict ends, there's going to be a lot of sanctions are still going to be around. There's going to be a lot of turmoil. There's going to be a lot of the EU is building up as far as military goes. They are going to be starting to look to get energy independent from Russia. Russia is going to continue to try to make money off the oil. So there's a lot of stuff going on right now. If you want to support the channel and learn more about building wealth, join us at thewisecommunity.com. WISE stands for Wealth Inspired Student Education. Our community is a group of people looking to change the current economic system by helping everyone get financially educated and achieving financial freedom. Members of the WISE community receive a monthly newsletter going over our top stock and crypto picks with other investment news. You can get free stocks by signing up with trading brokerages using our referral codes. Get discounts on all our classes and courses that we run. And we organize a weekly cash flow game, which helps our members increase their financial intelligence by implementing wealth building methods in a fun, interactive way. But the best thing you can do to support the community is hit that like button and subscribe. It's free. It only takes a second to do, and your interaction helps our videos get seen by more people. I also read every single comment and love to respond. And if it's a really good one, I'll put it in the next video. All right, let's get back to it. The basic fundamentals of the stock market are buy low, sell high, right? But unfortunately, what people do is when the stocks go down and when someone's new to investing, really, they hear about a stock, somebody tells them, hey, you should look into, XYZ company. And what they do is they go and they look at the price. They get on a brokerage. They don't even know how to get a brokerage. They go on Google and they look up the stock and they go, oh, and they go to themselves, well, the price has been going down. My friend, my buddy, the investment person, whoever told me about it, doesn't know what they're talking about. Look at the prices going down. And they say, that's a bad stock. I'm not going to buy it. And the opposite also happens. They say their buddy says, oh, this is going up. And they look at the price and they say, wow, it's been going up. And they get what's called FOMO, which is fear of missing out. And they buy high. And so the price of the stock is really the last thing that you should look at to evaluate a stock. All the price tells you is what it's going to cost to buy a share of that stock. That's really all it tells you. It doesn't tell you anything about the company. It doesn't tell you about macroeconomics, microeconomics, the financials. It doesn't tell you about the product. It doesn't tell you anything other than the price. But this is why they call us like dumb money, right? They call the big money calls us dumb money because we don't look at the right things, right? And then especially, and even if you did and you looked at price, why would you want to buy something and it's high? because then there's a higher risk of it going down, or when you buy it when it's low, there's a higher risk of it going, or a higher reward of it going up, right? Because it's low. So this is why you have to do a more analysis and learn, what you're looking at, and not do the opposite. Because what happens with a lot of people, they say, oh, the stock's going up. My buddy just told me he made a lot of money. Yeah, because your buddy got in when it was low. And then they get in and then it goes down. And they're like, oh, the stock market, I can't invest. I don't know what I'm doing. This is a scam. This is how they take all our money, blah, blah, blah. And so you have to understand that. So this is why you should not be a day trader. I always say, people think investing in stocks is like, I buy this, I buy low, and then I sell high. And then today, what's going on with the market? I move things around and blah, blah, blah. Let me show you something really quick. Let's look at day traders. All right. So, and this is what I think people think investing is, right? It's like looking at patterns and candles and support lines and resistance. And they hear all that stuff and they're like, oh, that's what I got to do. No, that's not what I do at all. I don't pay attention to day trading or technical analysis or any of that stuff. And the people who are day traders, look, studies show 97% of day traders lose money over time. Less than 1% of day traders are actually profitable. Now you might go, oh, I don't know, who's Ramsey Solutions? Let's look at broker reviews. In 2002, Glassdoor found that the average day trader annual income was about 74,000. Now their income is not the same as how much they make because they can get paid to be a day trader, right? It could be their job, right? So they're getting paid money to manage someone else's account. But let's keep going. If you ever saw Billions, right? There's traders on the floor, right? Those are the guys that they're talking about that have a job. Other reports found that the top traders with $10,000 in accounts turn a 3% profit each month. But these are the upper echelon day traders, right? So the very top of the tippity top can make a 3% return, right? Your average independent day trader might generate $750 a year. Okay. Moreover, studies show that most day traders will end up losing money with a poor profit to loss ratio. So the point of me saying this is, when you hear people say, oh, I bought this, I made so much money in Bitcoin or this or whatever they made, you got to dive in a little bit more. It's almost like being at the casino and you hear the people who are talking about who hit it big, but understand they don't make casinos based on winners, right? Because you're only going to hear the slot machine that's going ding, 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 ding. You don't see all the other ones you don't pay attention to all the ones that are losing, where they're just taking money left and right. It's the same thing when you hear about people that are done really well. Like I bought this, I bought it today and I sold it tomorrow and I wait a week and I made a 400% return. Wonderful, great. All right, but how many times do they have to make trades to do that, right? That's the key. How many half court shots did you shoot before that one went in and you put it on TikTok or YouTube, right? So so understand that the only way really to win in the stock market is to go long term. You got to go long term. You invest in you do microeconomic analysis, not macroeconomic. Macroeconomic is like what's going on in the world today. Microeconomic is let's study each company and say which companies 5, 10, 15 years from now are going to be a lot better off than they are today. And then when you have things like this Russia thing go on, or a pandemic, and I'm going to do actually tomorrow's video, I'm going to cover even more of this. When those things go on, you just look at those as opportunities, because if the whole market is going down because of the macroeconomics, the macro world, what does Russia in attacking Ukraine have to do with PayPal's stock going down? Nothing. It's just the market going, getting crazy in the day to day. People are going to stop using Google search or Amazon. Amazon's down like right now 2,700. It's down 300 points. So are people stop using Amazon just because Russia? No, understand that this, and I'm going to say this in a bunch of different videos in the future. The price of the stock and the company are two different things. The stock market doesn't mean what the company is or what's valued. The stock market is a voting booth of what people and what institutions are putting money in or taking money out. And it's about supply and demand of the shares of the companies. In the long term, that's the saying that says, in the short term, the stock market is and this is for crypto too, by the way. In the short term, it's a voting booth. In the long term, it's a weighing machine. Right? Because in the short term, things can happen. Like when Russia actually attacked Ukraine, I think it was like last Thursday, the stock market, all my stocks went up, right? But people would think, well, they should go down, right? It's crazy, but they all went up. It's amazing. Go look. Okay. So you can't pick in the short term. It doesn't make sense. A lot of times I hear people ask me, they go, oh, the earnings were so good and the stock went down. I don't understand. And there's reasonings to these things, but you can't predict it. If you could predict it, then 3% of the stock day traders wouldn't make all the money. It wouldn't just be the upper echelon who are able to do it. So stay out of the short term, do long-term investing. Watch part 2. I'm going to actually talk about one of my companies that I'm investing in for the long term. I'm super excited about it. They got some good things coming. To see part 2, join us at the W.I.S.E community. thewisecommunity.com, and you'll get to see all the extra part 2s. And I have the W.I.S.E public portfolio. You'll be able to see the stocks I'm doing. You'll be able to see our watch list that we're looking at. And on this channel, I'm talking about Tesla and AMC. Those are my 2 biggest positions, but all the other ones that we look at are in the W.I.S.E community. All right. Thanks for the time. I'll see you soon. And WISE community members, I'll see you in part 2.